Hello everyone and welcome to the webinar, The World is on the Move, hosted by Latitude, Residency and Citizenship and JTC Private Office. I'm Victoria Blackburn and I'm part of the JTC Private Office team. I'm joined today by Eric Major, CEO of Latitude, Matthias Belz, Head of JTC Private Office, and Karen O'Hanlon, Senior Director of JTC Private Client Services. Today, we're going to do a presentation. It will last about 40 minutes. And after that, we're having a Q&A session. If you have any questions, please feel free to jot them down on the Q&A tab throughout the session, and we'll discuss them at the end. Thank you. So first of all, I'd like to hand over to Eric, who is going to provide more details on Latitude and the services it has to offer.
Thank you, Victoria, and welcome all to today's webinar. We appreciate you taking the time to join us today. So a few brief words regarding Latitude, which was founded in 2017 by like-minded co-founders that have extensive experience in this investment migration industry of ours, over 75 years, in fact, where we have representation in over 15 jurisdictions and now stand roughly 80 to 85 staff and representatives in the countries listed on this slide. We're proud members of the Investment Migration Council, which is the association that sets the global standards for our industry and effectively is the voice of our industry. And we're, in fact, a representative for the region of the Caribbean, Latitude is, so we're very proud about that. Our business is focused around two main service propositions, basically one for international private clients that are seeking to avail themselves of these residency and citizenship privileges. So we have over 25 countries that we could assist our clients in becoming a resident or a citizen. But we're also active in advising governments in establishing these programs, refining them if they already have provisions in that regard. And our government advisory team has been responsible for the creation and launch of over half a dozen countries currently offered in the marketplace.
Thank you for that, Eric. And now I'd like to hand over to Matthias, who's going to give us a quick introduction about JTC Private Office and the services it has to offer.
Thank you, Victoria. Hello and welcome. My name is Matthias Belz. I'm the head of private office at JTC Group, a London-listed company providing private client, corporate, fund, and pension services out of 23 offices, as presented on the following slide. I'm residing and working in Switzerland, Geneva, and currently cover the United States, Europe, and Middle East with my private office colleagues. Our private office provides virtual family office services as a manager of managers, and we're supported by our award-winning client portal Edge. We see ourselves as expert generalists working on an open architecture basis with internal and external service providers for the bespoke requirements of our clients. For more details, I refer you to our website or invite you to contact me directly. I hope you enjoy the webinar, and I will be ready for questions later. Thank you.
Thank you, Matthias. And now I'd like to hand back to Eric, who's going to explain just how mobile the world has become and highlight some of the main drivers for mobility.
Well, indeed, Victoria, there are many drivers that bring applicants or clients to consider moving to another jurisdiction or acquiring an alternative citizenship. Some of these countries provide more than one of these drivers listed here on this slide. For example, in the Middle East, we have clients who obviously may have citizenships that does not afford visa-free travel to as many countries as their business requires them to have, at least with ease. And so they look at citizenship by investment effectively to enhance their mobility and to enhance access to their business endeavors. You could also have situations evolving in a particular jurisdiction that involves a family having to move very quickly if there are political strife or security concerns. So again, having an alternative citizenship could be very important and expeditious to get the family out. You have countries that are a big draw, a big pull with respect to their quality of life or the educational offering that they provide for children. And I think of the UK, I think of Canada, I think of the United States, Australia, New Zealand. That caters a large market interested in the educational infrastructure that those countries offer. And you have clients that are looking maybe as the next final stage of their life and their chapter to retire and to enjoy the spoils of their hard work. And we have jurisdictions that cater to that clientele. I'm thinking of Portugal with its non-habitual tax regime, a jurisdiction like Jersey, where JTC and Latitude are based, also caters to both a tax planning agenda as well as a quality of life agenda, and Monaco and the like. And some of these countries offer a little bit of everything. I'm thinking about the Caribbean, for example, that provides citizenship, which enhances people's mobility, but at the same time offers a very compelling tax planning agenda, as well as a nice place to put one's feet up and enjoy retirement life.
Thanks, Eric. I'm now going to hand over to Karen, who's going to talk about how JTC works with high net worth individuals, creating a range of bespoke solutions to help with asset holding and assist with these main drivers behind the migration aspirations.
Thank you, Victoria, and thank you everybody for joining us and listening in to our webinar today. I'm Karen O'Hanlon. I work at JTC in the private client team. I've been a trustee for more than 30 years, and I have been working with ultra high net worth clients and families living and working all over the world and hand-holding them, managing their global footprints. As Matthias mentioned earlier, we provide administration services to a whole host of structures, including the usual trusts, foundations, companies, funds, and limited partnerships, just to include just a few. Being an independent fiduciary, we are not limited in the types of asset classes that we hold in our structures. And this is very much where we are working with independent lawyers, tax advisors, intermediaries, and the immigration experts such as Eric and his team. Some of the main drivers for our clients post-COVID, they have been analysing, is now the time for them to convert their businesses into liquidity and having that liquidity event. And what does that mean for them? And are they actually in the right jurisdiction to do that? And this is where we very much work with the independent providers to ensure that they are getting the best advice and choosing the right jurisdictions to move to. Some of our clients have also been looking at their retirement planning and where is the right jurisdiction for them to be. We have recently acquired the RBCC's Limited pension business, and we have an in-house team that sit within our corporate services business. So we work very closely with our corporate team. Our corporate teams look after clients who run multinational corporations, and there's always a private client sitting around there somewhere. So we pretty much wrap our arms around the client and work with the best providers to provide the optimum solutions for them. Another part is tax planning. We work with tax planners, tax advisors, providing a comprehensive range across all our different jurisdictions and to help them managing the affairs. And our private office provides that bubble solution around them and helps them navigate through that landscape. One of the drivers could be education, one of the drivers could be elderly parents about where they want to move to, are they in the right time zones? So that's very much what we help with, and the private office will guide them through that minefield as it potentially can be.
Thank you for that, Karen. Now we're going to hand back to Eric, who's going to talk to us about the three main plays in determining the migration of individuals and their new destination country.
Thank you, Victoria. Well, Karen said something that's relevant to this slide here, that there is indeed a minefield of options and possibilities when it comes to some of these solutions, at least in this investment migration world of ours. Some of these countries indeed will address more than one driver, and often our clients will have more than one motivation. But in trying to explain the landscape, because there's so many programs and products available in this area, we generally tend to segment the needs into three major plays. Our clients are either doing this predominantly for an immigration play, which is the true desire to move and relocate to a new country in search maybe for a better quality of life, or simply the rule of law and a lifestyle and social setting for their family, as well as education. Other cases, there's no intention to relocate in the short term. It's just a question of enhancing mobility, again, to support in terms of their leisure travel, or in terms of their business, and in terms of accessing countries more easily. Or you do have, for some clients, a tax motivation. They may have a wealth effect that's around the corner, and therefore it makes sense for them to be at the right jurisdiction at the right time. So most of the countries that we offer will fall into one of these major plays, so to speak. But I thought this slide would be important to spend a few minutes just to explain what the media often confuses when they tag these programs as passport programs. Very few of them are passport programs. Most countries, including the UK, including Canada, including the United States, including Portugal, offer a residence program with a pathway to citizenship. In fact, all of these programs, talking first with the UK or Portugal, which are also two very popular destinations, you first get a residence visa, a temporary status, which with the passage of time and the fulfillment of the investment, could graduate you to permanent residency, or what the UK calls indefinite leave to remain. And only after a further amount of time, possibly the learning of the language or an examination, could one then further graduate to citizenship. And in the case of Portugal, that would be EU citizenship. So that's generally the process under which these programs work. But in the last 15 years, we saw certain countries, starting in the Caribbean with St. Kitts and Nevis, and now most of its neighboring islands, expediting that journey to citizenship with very limited, if not to say no physical presence requirement. So it's an immediate, following an investment, and immediate access to citizenship. Now, we put the EU citizenship at the pinnacle to this, and it's surprising to me how still a lot of people don't fully appreciate how powerful EU citizenship is vis-a-vis other types of citizenship, including Canada, including Australia, including the United States, is that with EU, 1 equals 27. So, and those from the UK will know that they've lost that access with Brexit. But if you're a French national, you have the right to work, live, settle, retire in all of the remaining 26 EU member states. Same if you're from Malta, same if you're from Cyprus. So the EU really is the ultimate citizenship in our industry. On the next slide, again, I'm just giving you examples here of what makes up most of the immigration play options that our clients could be looking at. These are countries like the United States and Canada and Australia, but also the UK and Portugal. They have well-devised residency programs destined to attract families to actually pick up their bags and move to these places with a view of spending time, often with the children in mind, education in mind, but also lifestyle and sometimes business as well. The next slide features some of the countries that are really catering to the mobility play. And this is, of course, all of your what is now 5 Caribbean nations that offer citizenship effectively in under 4 months from submission to approval, by making an investment, which for a single applicant could be as low as roughly 130,000 US dollars for a single applicant, and as low as under 200,000 for a family of 4. So you see that some of this is actually quite accessible and affordable for the affluent market. But then again, as you saw with the previous slide, in terms of the EU context, Malta, being part of the EU, offers citizenship under its program. It's a 16-month journey from beginning to the end, and that expedited process means it's going to be a lot more expensive. In fact, circa €1 million that you would effectively have to provide in terms of capital outlay. The next slide talks about those jurisdictions that offer maybe as well as a lifestyle play, a tax play. Switzerland with its well-known forfait lump sum taxation regime, Jersey with its 21E, what used to be called the 11K regime that Guernsey emulated, but even the UK, as tax advisors often remind the world that indeed, if you're a non-dom, a resident but non-domicile, you can indeed shelter your worldwide income from the UK tax net, and that's why the UK also makes sense with respect to those who are wanting to move there and have a tax savings. Portugal, again, I mentioned earlier with this non-habitual tax regime. Italy emulated what Portugal launched in 2012 with this new tax play that effectively for €100,000 gets you tax residency in Italy. So that's just a few examples. And I like the statement here, this slide, where when it comes to tax residency, it's not so much where you are that counts, it's where you're not. It's easy to say I'm a tax resident of Jersey if you have a home in Jersey, you spend time in Jersey, but it's more about making sure you're not a tax resident elsewhere, like the UK. So it's more about making sure that you're not tripping over the tax residency requirements on the other countries. But these countries will gladly take you as a tax resident. So I'll hand it over back to you, Victoria, to provide some example and case studies that touch on some of the points we already covered.
Thank you, Eric. And first of all, I just want to say that I am based in Luxembourg. As I've mentioned already, I'm part of the JTC private office team. So I've lived here for a few years, but I previously lived in Jersey for over a decade, and before that, I'm from the United Kingdom. So I've had my own experiences of relocating. And one of the big things we actually do talk about very much so is the emotional factor behind it. There's a lot to consider before you relocate. But there is a lot of emotion behind relocating, and I think more than people expect sometimes. And every member of our private office team has themselves relocated once or twice or even more times. And so they really know what it means to move. There's also a large amount of paperwork involved, both of a personal and corporate nature. And people like to have time to freed up for themselves, so we can actually come in and help them with that. It depends where you move. Some places have more paperwork. I know very well about that, having in the last few weeks been stood at immigration renewing my papers because of Brexit recently. But clients find they like to be in touch with someone who understands that practical side and that emotional side, who can help them move into a new community, help them with the school network, and sort of a business forum as well. That can really make the difference between a good move and a great move. And your private office representative can help you break through language and cultural barriers very quickly and logistically as well, because they understand where you are. And they can help you make that place, that new place, feel like home a lot quicker, and act as that kind of sounding board as well. So you are working with somebody that really gets what you're going through. And we've helped move a number of people. And if we turn now to the next slide, we've got a case study on here. And this was a client of ours who had a wife and 2 children, and he amassed his wealth very, very quickly. And because he was so focused on his business, he didn't have a lot of time. And he wanted to relocate to a safer location. He was coming from the Ukraine. He had homes there in London and Mallorca. And so what we did was we helped him move with his family. We helped him set up a new business base and to basically help organise his personal affairs. Because he'd been so focused on his business, he hadn't had a lot of time to do basic things like insurance and even wills, because that's one of the big things with clients. They're so focused on their businesses that those other things fall by the wayside. And we come in and help with those things. So what he needed to do as well was set up new bank accounts, and he was also starting to think about long-term what he wanted to do in terms of setting up a philanthropic trust. And he also had issues in terms of there was a language barrier, so we were able to come in and help there with him and his family. So on the next slide, you can see that we initially orchestrated a beauty parade of legal advisors to help work with the client's new residency and consider the rules that he had to consider now, but also if he'd actually inadvertently broken some in the past, and basically do a big tidy up exercise. We worked with his PA to help that person organise and support him more efficiently. And that's one of the things that we'll do, is that we don't come in to break anybody's existing team up, we come in to support them and are very practical about the use of our time and the use of their time. We secured premises for his new office setup, and we took a long time with these kind of fireside chats that we had with him to understand what his needs were and to understand what his aspirations were. And he very much wanted to give money to charity and to give money in his home country to set up schools for disadvantaged children. We also came in to help with the accounts for his business and, as we said before, to set up new banking relationships and to support with the IT, etc. So we did a lot of work with him and his family, and basically helped that move go a lot smoother for him. And we've been there on an ongoing basis now for him. And it is very much as little as a client needs, but also as much as they need, and they can dip in and out of our support in that sense. So that's just one example of the type of services that we can offer. And next you'll see on the slides, there's the key contacts for Latitude, followed by those of the JTC group as well, both private office and private client services. I'd just like to say thank you very much for listening to our webinar today. We're going to move into the Q&A session now, and some of you have already submitted questions. Please feel free to add some more. And if we don't get through all of the questions today, we will answer you personally as well. So thank you very much.
Thanks for that, Eric. I've just seen, it's got quite a few questions here. And actually, I think this is one that maybe all three of you might have comments on. So the question is, what are your views on someone not being resident anywhere? And do you have clients that want or are able to achieve this? I might actually go to Matthias on this one first, but then bring you back in, Eric and Karen as well, please.
Victoria, interesting questions. My personal view on that, where clients or prospects claim not to be resident anywhere, I'm afraid they might fall into the trap of becoming a tax resident everywhere, because if they generate income or capital gain in some countries but claiming not to be resident, after a while, I think these countries want to have their fair share, and they're risking of being taxed in all the touch points or countries they are generating some kind of income. It's a dangerous game. I strongly suggest to have at least one proper tax residency.
If I may, I'll echo that, or Karen.
Yeah, Karen, have you seen that with any clients as well, before we come back to Eric?
Oh, you're on mute.
Sorry, we'll bring
every Zoom starts with a mute, right? Avocado. Yeah, sorry. Yeah, absolutely. Just as Matthias says, yeah, it's a very dangerous play, not to be tax resident anywhere. But I have to say, I've had the question raised by clients and potential clients more times than I care to mention. And so this is where we work with the advisors, the tax advisors, to really unravel and unpick exactly where they could possibly be resident, but actually where do they want to be resident? And that's when we'll bring Eric and his team involved as well. So really working as a team of people around a particular client to make sure that we do find a tax residence for them, because it is really important for all the reasons Matthias says, and then handhold them all the way through that process. And that's very much what the private office does. And then we then bring them through to our private client team for administration. Sorry, over to you, Eric, on that one.
Well, I'm just going to echo. I'm going to echo everything you've just said, and Matthias as well. And I do recall one particular client that I had that was very disciplined around spending, 80, 85 days in one jurisdiction, and then 80 or somewhat days in another. In fact, have 4 jurisdictions that they were dividing their time in. She had been diligent in doing this over the last 4 years, but she had been rightly counseled to choose at least one place where you're spending more there than elsewhere, and having enough ties to then claim and say, I'm a tax resident here, and choose rightfully, I guess. If you have such a lifestyle where you are bouncing around in different jurisdictions around the world, it's not very hard to choose one in particular where you may be spending a little bit more time, whether it's the Caribbean, whether it's Jersey, whether it's Monaco, whether it's Singapore. There's obviously a number of very attractive jurisdictions that would welcome an applicant with this kind of lifestyle to claim tax residency. So they do exist, but I think everyone who's close to this world of ours would counsel equally the same way, which is choose at least one place by spending more there than elsewhere.
Thanks for that, everyone. Now, another question down here, I think for probably Matthias this time. Once a client's moved, what are the types of services from private office that they still typically require?
Right. As we know, every family is different, so the services are not the same for them all. In most cases, if it hasn't already been done during the moving stage, we will start introducing other professionals, let it be tax advisors, investment managers, bankers, insurance brokers, legal support, etc. In some cases, we are playing a coordinating role in that, and support to get the client on their feet at the outset. And then it goes into stages. Some families then require ongoing services, let it be quarterly consolidation of their investments. For that purpose, many of our clients like our client portal called Edge for consolidating, reporting, and controlling purposes. For some clients, we action very mundane services like bill check and payments. We have one particular client who's investing a lot. He's asking us to become his centralized KYC due diligence center. In the past 6 months, we supported the migration of some of our clients who intended to set up a new business in the country they would settle down. They want to continue in their trade they've been working in the past. So we set up the company. In some instances, we would even provide the directorship and back office support. We had the example earlier of a client we moved into philanthropy, where we can advise him, make the right introduction, and in some cases take board memberships. So all in all, it's very bespoke and it depends on the requirements of the family. But our services are very wide-ranged. Whether we do them in-house or externally, we will coordinate them on behalf of our clients.
Thanks for that, Matthias. And then one here, Karen. So someone says on here, they're based in the UK, but they've got many LATAM and Asian clients. And they say, can JTC cater for this? Are we in the regions on a regular basis?
Yes, absolutely. So we're in all the Crown dependencies here in Europe, as well as Geneva and Luxembourg. But we're also in the US. So we have a presence in New York and we have a presence in Miami. And our office in Miami is very well connected to Latin America, if we're just talking about the Latin American side. And they travel in country frequently, but we also have Latin American teams sitting within most of our private client teams that are all over the world. And the same goes for our Asia offices. Asia, we have Singapore, Hong Kong, Malaysia, very well, a very good footprint over there. And we bring those clients, say for instance, one particular one we're working on at the moment is bringing British nationals overseas from Hong Kong office who want to move to either the UK or Ireland. So we're working with the professional advisors to assist them. So we're really helping clients create their global footprint, and we work with them to decide, with the clients and the intermediaries, where would they like to have their clients serviced and where would the family like to be serviced from. So it's very much about the client service. How do we do that? How do we give them what they want? So yeah, very much working in that way. And you know, that goes for all over. We also have a South Dakota office as well, which is one of our fastest growing offices, headed up by another Jersey girl, Michelle, which is great. So yeah, lots of global footprints, lots of touch points, bringing them into Europe and then taking them back out to Asia or taking them into the US. How's that?
Thanks, Karen. I've seen, actually, we've got quite a few questions on here, and I think I'm going to combine two actually, which are for Eric. So someone's asked, Eric, have you seen any recent trends with certain jurisdictions being more popular than others to relocate to? And someone else has also asked about Greece as a jurisdiction for of interest for residency programs. So maybe we can do those together.
Yeah, I could address that in terms of popularity. We've certainly seen over the last, I would say, plus 5 years now, strong interest with Portugal's proposition. And I'll tell you, there's 3 reasons. A, it's a nice place. It's a great country that people like to go to, and it's got the sun, it's got the people, it's got the great food and the great wine. And so that's a smart place to hang out and actually become a resident. Then there's this other thing, that they're part of the EU Schengen Treaty, which means that with your Portuguese card, if you're from Shanghai, you could fly in to Paris, post-COVID or pre-COVID, or into Frankfurt, or into Malta. So it gives you travel privileges, not because it's a passport, only because it's the card, and allows you to visit 26 European Schengen nations. So there's that mobility play that caters to a different audience. And then they have this thing, also the non-habitual tax regime that they've introduced, that makes it also a smart play if you're wealthy and you want to avail yourselves of a 10-year tax holiday. And then finally, now that I think about it, there's 4 reasons. It's a residence program that has a clear pathway to citizenship, just like the UK does and Ireland does and Canada does. If you do the time, make your investment, you could graduate to citizenship. The thing that Portugal is interesting is that it doesn't have this stringent, difficult, most of your time requirement that the UK or Canada or US has or Ireland has, which is you got to spend a lot of time there. They only ask for 7 days a year. So it's got the weather, it's got the food, it's got the tax regime, it's got this card that gives you access to the rest of Europe, and it's got a pathway to citizenship that gets the job done just by spending 7 days a year. Now, albeit I will add, you have to learn a little bit of Portuguese to get that. So that's why it's been popular. I'd be remiss to say that we've seen a lot of interest in the last 6 to 12 months, but mostly 6 months, from the United States. So we all seen the turbulence that we've had there in North America and the United States. That's brought a clientele to start looking at acquiring residency, and recipients of this has been the UK, Ireland, again, a bit of Portugal, and my homeland of Canada as well, have been very popular destination for the American market. Yeah, well, knowing that you said, Victoria, that there's going to be 2 of us to answer, so I'll stop there and leave it for the Karen or Matthias to add to that.
So yeah, no, it was as well, Eric, it was talking about adding Greece, I think, as well. So I'm not sure at the moment, we haven't got anybody that's been looking at Greece. I've had clients, and I think Matthias and both Karen have, that have asked about Portugal because it's really popular, but Greece hasn't come up on our radar, particularly at the moment, just through the clients we have. If you
yeah, let me comment on Greece. Greece also, like Portugal, has been very popular, again, for the first two main reasons, you know, the weather, the food, and the beauty of the country for one, and the fact that, like Portugal, Greece is part of the Schengen Europe. And in fairness, it competes on the cost side of the equation to Portugal because the real estate requirements are at a lesser investment threshold. So, you know, it's been very popular with the Asian market that are, again, just looking for that residency card and that access. And so it's done well. Now, I wouldn't say it's a well-defined pathway to citizenship. It isn't. So it's purely a residency play. I wouldn't say it's a tax play. So it's purely, you know, a nice place to be a resident, a card that gives you access to the wider Schengen Europe, and frankly, well priced, hence why it's been popular, particularly out of Asia. So that's our, you know, that's why Greece is actually relevant in this proposition. And it's more, I would say, almost a mobility play because it's for clients who want access to Europe.
Eric, if I may add, Matthias here, we've seen a bit of a trend from Turkey to Greece. Oh, yeah. It's very close. As you said, it's opening Europe for Turkish, just as a little addition to that.
Yeah. And the Turks are a prime example where, obviously, with the limitations that they have with their own passport and their access to Europe, they invest in these programs so they can access the wider European member states. And of course, the UK is also, for many of them, on their sites. So as we're just kind of touching on now, you see not every one of these these client situations is really about a full-blown move, like to Ireland, to the UK, or to the United States. For some it is, but for others, it's really more an access play, a mobility play, but also potentially a consideration for down the road when life slows down a little bit for them, because they all run their empires around the world and they're very, very busy, and they need to know they have a pathway, a place to go down the future. And so that also plays into many of our clients' mind.
Thanks very much for that, guys. I've got all people always ask about this, fees. So how do we structure fees? So I might actually come to each of you in turn there. So Matthias, let's start with you. How does JTC Private Office structure its fees?
In general, we are very flexible on fees, i.e. that can be time-based fees, transactional fees with a very clear scope of work. But I must tell you, the vast majority of our clients apply for an annual retainer, which is a commitment from the client, but at the same time, it's like a discounted time charge, again, with a scope of work. It starts at 12,000 a year. It provides priority to these clients. They will always be handled first, 24/7 availability of the relationship manager, instant onboarding, and access, obviously, to our internal, external network of specialists. But I'm coming back again. We are not telling our clients how to pay us, as long as it makes commercial sense. We always find an arrangement. But we like the annual retainer. It takes this time element out of it, and not this constant discussion about hourly fees. Or we calling you up now on the phone talking about last year's holiday. We don't want to be charged for that. And certainly we will not charge our clients for that.
Thanks. And Karen, if you can comment there, because I know we're still part of JTC, but the fees can be slightly different there as well.
Yeah, absolutely. So within our private office, 9 times out of 10, the client is coming in his own personal name. So, and the the monthly retainer works really well for them, and they really see the value add. From the private clients team side, it really depends on the structure that we've put in place, that we've worked together to put with the tax advisors, with the lawyers, whether it's a foundation, a trust, a corporate vehicle, a combination of all three, private trust companies, all kinds of different variations. So we tend to have like a minimum annual responsibility fee, and then we go on to time charges. However, like Matthias said, we are flexible and we do fixed fee arrangements and what have you. But again, it depends on the amount of activity that's going to be going on within that structure. But yeah, we're very close, and it's all about client service. So it is about picking up the phone and making sure that we are very proactive rather than reactive to especially changes that are going on. And I've seen some of the questions that have been posed about, so changes that are looming later on this afternoon in the UK that might have an impact for our clients. Lots going on in the US with potential new wealth taxes coming in. So it's making sure that we are on the front foot, we alert our clients, and we guide them through that minefield again. Yeah.
And Eric, how are your fees structured as well?
Yeah, very simply and quickly, for private clients, we charge a professional fee, typically a certain portion to start the work. And what is the work? It's really mounting and compiling applications for residency and citizenship. So it's a governmental process. And then the balance of the fees upon submission. So that's very simply what we would do on the private client side. But cognizant of the audience we have today, where many who are listening may have their own private clients and may themselves wish to be in the lead of that relationship of a client, because there may be other aspects to their move that they're able to service and fulfill. And so over 60% of our business is B2B. So we work with practitioners, whether it's immigration lawyers in the UK, whether it's tax advisors in Switzerland, whether it's property estate agents in Malta who have the client or are buying property but need our piece of the equation of the residency or citizenship. And two things will happen there. Either they say, you know what, Eric, you're the expert, Latitude will hand over the client, you contract with the client, you charge your fees, and you take care of that. And frankly, that's the type of relationship we have with JTC. You introduce, we take over, and we move it forward. In certain jurisdictions, and I'm thinking of law firms who also are pretty good at mounting and compiling applications, maybe very good from a UK perspective, but maybe not so good from a Malta perspective or a Portugal perspective. So we work with them, often them in the lead, and we're there to support them and do our bit, which is the submission and some of the work on the ground that often needs to take place. So long-winded way of saying, if it's a private client, we'll contract directly with the client, and that will be professional fees. But if we're working on a B2B level with an advisory firm or a legal firm or the like, we could let them be in the lead and there to support them with the overall mandate that they have. I think is best summarized.
Thanks, everyone. I've got, as Karen mentioned there, I've got quite a few people from the UK actually asking about recommendations for UK non-DOMs who are worried about the announcements later today, especially if they don't want to go back to places like Russia or Saudi Arabia. So is there any recommendations on that front from a migration point of view, Eric, and then I'll come to the JTC team as well afterwards.
Well, that's always a prickly question because our business is somewhat predicated on policy and politics and obviously taxation. But without getting into the particulars of any one client's view or decision, the UK, as an example, has these provisions over 200 years old, although they've adjusted them along the way around residency and non-domicile. So if you're a foreign national coming into the UK, at least for many, many, many decades, if not centuries, the UK has been an attractive place for you. Not forever. Eventually, this non-dom concept erodes if you're spending a lot of time in the UK, i.e. more than 15 years. Will they change that? Will they tinker with that? We'll see. We'll see. If they do, where will they go? Well, they'll look at places like Jersey. Again, if they like the English-speaking world, they'll look at Jersey and Guernsey. If Asia still has some very attractive places in Singapore, for example, as a destination, so that will often be linked more to the business element. So there's a lot of different things that we could look at, I guess is what I'm saying. But I don't want to dismiss the UK for the foreign national entering into the UK. It has, for many, many years, been a very attractive place. I doubt they're going to tinker too much with that. But admittedly, we are in unprecedented times. So we'll see.
And Matthias and Karen, I don't know if you've got any comments on that, if you've seen anything from clients recently.
Not really, Victoria. I think everybody's sitting tight at the moment, waiting to see what the announcement will say. I think the hope is that there's not going to be much change, if any. But again, we will work with our clients if they do feel the need that the UK is not for them. But like Eric says, the UK is still a very attractive destination for those coming in as well, foreign nationals coming in. What about you, Matthias? Is there anything you want to add?
Not really. I believe everything was covered. As you mentioned earlier, Karen, we've seen a bit of at least interest, very strong interest from Hong Kong into the UK. For other parts, we've actually seen a very famous UK singer moving to the Geneva area. What can I say? Everybody has different motivations as well, right? It's not only about taxation. Sometimes it's about proximity, to be close to family members. We see that especially now during the COVID times, where we've seen a couple of families who consider establishing a proper family hub somewhere in the center between the various jurisdictions, just for them to regroup for once or twice a year. So I wouldn't make out one particular trend. It really depends on the individual's interest.
Matthias, I'm going to add a word about that, because often taxation comes up, but when you really distill it, once clients typically really think this through, it's about where you want to be on weekends. Where's your nucleus? Where's your family? Yes, could you structure things in a more tax efficient way? Undoubtedly, with all the opportunities and options and competence around an audience like this one, the answer is yes, you could do things more tax effectively, but it never leads the debate. It's really about, and that's why places like Jersey is attractive, because there's a lifestyle play, there's this rule of law. I mean, let's not underestimate how important it is. If you're coming from Hong Kong, you know why you're moving, right? You're really concerned about the future of the rule of law. And let's not be overly careful about what's happening in the United States as well, because there are dynamics at play there as well that's bringing certain clientele to at least think about what if. And when you come to that, yes, you could have a knee-jerk reaction. I'll go to Monaco. Well, how's your French? How's your Italian? Because you know what? That's what they speak over there. With a bit of English, I'm sure, on the side. But so it really does boil down to your circle of life, your what you do on weekends, what you like to do, and your proximity to family and business as well.
Yeah, I'd echo that as well, Eric, because I was going to say it's one of the things. Matthias and I were actually talking about it yesterday. I get clients quite often to actually just say to them, just write down on a piece of paper what makes you happy, what makes you content. And it can be the smallest thing, but you're right about the language, because some people say, oh, I can get through it or not, but it's difficult. But is it being with your family? Is it sitting, having a beer in the sun? How much sun do you want to have? It's really, really important to make that move. sort of the right one, and think about being close to family, because you see something happening at the moment, how quickly can you get to see your family if you live really far away? The world is very different at the moment.
Victoria, maybe to complete it, we even had cases who considered medical support as very important. You don't want to be on some remote island with a heart condition, for example. Or there are many different illnesses where you might need support on a short notice, and you don't want to be in the woods somewhere, but rather close to a proper, good medical support.
Well, and just to add to that, and that's where, if you're after the island life, and then you know that you're maybe in a region that has a few of them, you start comparing. What's an Antigua versus an Anguilla versus a St. Kitts versus a Cayman, right? But they all have their offerings and infrastructure, and so that plays into it as well. So tax is part of it, but I'll be damned if it ought to be the leading part. It should not be. Often what prevails at the end will be these other very important considerations. And you're right to raise medical or health services as the new important thing in the equation, which we may not have been focusing on as much pre this pandemic.
And I was maybe just one other question quite a few people have asked here about where most of your clients come from and whether there's been a change in the last 12 months, and that'll probably change actually between all three of you. So maybe if I come to you, Karen, first of all, so headquarters in Jersey, but where are most of JTC's clients from?
No one particular place. We really are global. We're getting clients coming in from Asia, as I mentioned earlier. We've got working with clients who are actually creating a footprint in the UK, and they're moving from the US. So yes, it's east, west. There's no one place at the moment. So that's why we have to be in so many different jurisdictions, so we're able to cover that. So we're in 19 jurisdictions, and able with many more offices, and able to cover all of that. But I just wanted to touch on the point that Matthias and Eric were talking about. I think one of the biggest drivers I see for clients moving, especially as they have, a lot of them have been displaced because of COVID and ended up in the wrong jurisdiction. And then we're having to work alongside them to see what the ramifications of that will be. But one of the big drivers is education, and where are their children and family being educated, and that's driven them into choosing certain jurisdictions as well. So just another point, the medical, but also the lifestyle, but also education is really important on the list.
I don't know, Matthias, did you want to add to that? In terms of
trends, when we talk about movement, thank you, Eric. When we talk about movement, we've seen trend from Turkey, outbound, obviously, as well as Middle East, where some families start having concerns about uncertainty of the future, the US retreating to some extent, where they try to look for a second passport or a second home, what they could retreat to. But first and foremost at the moment for us here in Geneva or in Switzerland is Turkey.
For us at Latitude as well, it's evolved. We obviously have a very important footing in the Middle East and the UAE, so that's always a strong market, a demand for our services, and so that continues to dominate the overall activity of our firm without a doubt. But one thing that's changed, in my 27 years of doing this, it's no secret that most of the demand for these services came from emerging markets of Asia, going back to Hong Kong, the 80s and 90s, coupled with a bit of Taiwan and a bit of South Korea. But then this massive thing called China woke up, and that kept us all very busy and paid a lot of my mortgage over the last 20 years in terms of the demand and the services that we were able to offer that massive market, which continues to be very relevant. What's new in the last few years? We touched on the United States, but of course, Britain has left the EU. And you got a few Brits with lovely homes in the south of Spain or the south of France or in Portugal thinking, how am I going to be able to spend some decent time there if I don't have a visa? Because they'll need a visa if they're going to spend a certain amount of time there. So what used to be just an emerging market thing is now becoming also an established Western market thing. And that's why it's truly a global business.
Well, thanks very much. I'm just going to say thank you to all our panelists today, Eric, Matthias and Karen, and also to the teams behind the scenes as well, because a lot of work goes into these things. So thank you. And thank you finally to everybody that's listened in today. Sorry if we haven't got to your questions. We will try and contact you and have a discussion with you. Please visit both our websites for Latitude and JTC Group, and we'll also be sharing the slides from today and a recording of this session later on as well. So have a good day and thanks for joining us.
Thank you very much.
Thank you.
Thanks.
Thank you. Thank you very much, everyone.